Hello traders, my name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report. So let me show you the best situations in the market, the best trading occasions in the market, and let me explain you what is going on from the fundamental point of view as well. Today is very volatile for the Australian dollar. As you can see, we had a speech from Reserve Bank of Australia governor, and also it is said that Reserve Bank of Australia will cut rates by 25 basis points in July and August. This is definitely negative information for the Australian dollar, and the Australian dollar is going down. And actually, thanks to this, we do have a few interesting setups, trading occasions on the market because of this. As you can see, in the 3.5 hours, we'll have an interest rate decision statement from Bank of Canada. Market consensus is that rates will remain unchanged. So 3 hours 22 minutes. Keep your eyes on the Canadian dollar if you like the elevated volatility. With that being said, we can take a look on the charts. Because apart from those informations, there's not much going on the markets from the fundamental point of view. So we start with gold. Gold, which tried to initiate the correction yesterday and today, but it was stopped here, and this can be considered like a short-term resistance. With this reversal, I think that chances that we will get to this horizontal support and also 38.2 remain very high. So this is a failure of the bullish movement, and with this failure, the price is poised to the further downswing, and this is my view on the gold. Next one is American dollar to Canadian dollar, and this is beautiful because we were talking about the buy signal for a long time. It started on Friday after the worst GDP data from Canada, and it allowed to create the inverse head and shoulder pattern, left shoulder, head and right shoulder. We broke the neckline. At the beginning of the week, we broke the horizontal resistance too, and now the price is going higher, and actually today we beat those highs from the end of January, and we are on the highest level since the beginning of the January, and this is the full buy signal. And why? Because we are in the channel up formation. It could have been the flag, maybe it will be a flag, why not in the long term, but on the daily chart also a long term. This is a channel up formation. So channel up formation after the bounce from the lower line of this pattern, channel up formation promotes the upswing towards the upper line of this pattern, and this is our view on American dollar to Canadian dollar. Obviously, after such a strong upswing, maybe a bit of correction is needed, and then a further rise. Maybe this correction can be even as deep as to the neckline, we will see. But corrections happen, come on, there is no directional movements without a correction. Like here, strong movement, strong correction, strong movement, strong correction. So corrections always happen, and you need to be aware of this, especially after the movement for 240 pips, which is a lot. Now a cable, instead of breaking the upper line of this pattern, broke the lower line of this pattern. So actually that is supposed to give us a sell signal, especially that we came back below the neckline of this inverse head and shoulder pattern, left shoulder, head and right shoulder. This inverse head and shoulder formation looks the best on the weekly chart, so for this we should wait for the weekly candle to close, but on H4 chart it does not look good. Okay, fair enough, maybe you want to create a flag from this, like here, but still price going below the pink support is not the good thing. and well, it does not look good. We can consider here this is a resistance, and this can be considered in this case as a false breakout, so it does not look good for the buyers. With the price being below the pink area, the sentiment is rather negative. Now the euro dollar, which is going down as expected, and the biggest movement here happened yesterday at the end of the European session. It was expected. Why? Because of this head and shoulder pattern and because of this descending triangle pattern. So we broke from the upper line of the descending triangle pattern and went lower. We had a small break here on the horizontal support, but the price created kind of a descending triangle pattern, so the pressure was rising. Or if you're not convinced about descending triangle, it was a pennant. It doesn't matter, it resulted with a bearish breakout. And now the movement towards the lower line of this descending triangle pattern here, the movement towards this area is very, very, very probable. Now euro to British pound. So yesterday here I was expecting the price to get to the horizontal resistance, and it happened almost straight away. I thought it's gonna take some time, but it happened straight away and we had a bounce. So this pink area is an ultimate resistance. If you're not convinced, look at here, look at this long-term chart. Actually, let me change the color of this line because there are two pink lines, maybe something less aggressive for our eyes. Okay, fair enough. On a daily chart, we do have a beautiful shooting star yesterday bouncing from the resistance. So this is a proper sell signal. Today the price is climbing higher, bouncing from the lower line of this correction. Okay, fair enough, let it be. But the breakout of this lower pink line is a trigger to go short. Like price closing H4 candle below this lower pink line will be a significant strong invitation to go short. Euro to Japanese yen. What is happening on euro to Japanese yen is a beautiful bounce from the horizontal resistance here, and then the breakout of the, let's say, upper lower line of the channel up formation, right? So we had a breakout of this line, and this opens us a way towards, I would say, towards this support. So the sentiment on euro to Japanese yen is for me negative. Now silver. Silver is having a rectangle pattern. Rectangle should result with the trend continuation because that's what rectangles do. If you want to be precise, this can be considered as a pennant rectangle. It does not matter. What matters in this case is price getting here opens as a short-term buy signal, price getting here opens as a short-term sell signal. Why short-term? Because we are in a downtrend, so any upswing is only a correction most probably. And why short-term to the downswing? Because we do have a horizontal support here. So currently this is a sideways trend. We are waiting for the further action here. Euro to New Zealand dollar. Yesterday I told you that there's a kind of inverse head and shoulder pattern here, and the buy signal is triggered after the breakout of the black line and then positive test of this line as a support. But in the same time I told you that if you're not convinced, fair enough, because still you need to see the breakout of the pink line. Importance of the pink line, you can see here 1, 2, 3, 4, 5, 6 points, and then the horizontal resistance, and the price did exactly what was expected. So the price went higher but did not break this resistance. So that is a confirmation how important this resistance is. And if you want to buy here, you see the importance of this resistance. So you need to know that this resistance needs to be broken first for the proper buy signal. So the proper buy signal will be triggered when the price will close above the horizontal resistance here. As long as we are below, there is no proper buy signal on this instrument. But on Bitcoin there is. As you can see, the price failed to break the horizontal support, which is with us, which is important since the beginning of the year. So this seems to be like the most important line in 2019. We bounced from this level again. The price broke the upper line of the flag, which in theory brings us a short-term buy signal with the target on the gray area. So we do have the short-term buy signal with the target slightly above $4,000 for one Bitcoin. Crude oil breaks the support, and the importance of this support is a bit questionable because well, it's very steep. So I don't think it can be crucial here. Before this, we were waiting for the breakout of the upper line because that was an ascending triangle pattern, but now we do have more pressure to the downside. This is the closest support, and now breakout of the black line can really start bigger troubles here, but as long as we are below this black line, we are more or less safe. Now those three interesting occasions with the Australian dollar. First one is Australian dollar to Swiss franc. Yesterday I was very optimistic about this instrument because the price created triple bottom formation 1, 2, 3 and broke the neckline of this formation here. And I told you that comeback above this level would be a proper buy signal, and it really would be a proper buy signal only if not the fundamental distraction like this dovish Bank of Australia. Why it was a buy signal? Well, first of all, because of a triple bottom formation, but also because that was a false breakout below the horizontal support and below the lower line of the symmetric triangle pattern. So price getting there was a very strong buy signal, but it got denied because of the fundamentals, and now actually this is a false breakout, and this is why the price is going down, and we are on the lowest levels since the end of January with the proper sell signal. So there is a proper sell signal on Australian dollar to Swiss franc. Now Australian dollar to Japanese yen with another sell signal. So before this, what happened today, we had a positive situation here. Why is that? Well, the price was in an ascending triangle pattern. We had a wedge breakout to the upside. We had a flag or a wedge breakout to the upside, but this breakout was a false one. We had a bounce from the uptrend line. The movement after this breakout here supposed to be an upswing towards the horizontal resistance, but the price failed to go there and went lower, breaking the lower line of this ascending triangle pattern, and this gave us a sell signal, which is pretty strong on this pair. That's a downtrend correction. It seems like the correction is over, and now we are back to the downtrend on Australian dollar to Japanese yen. The same situation can be seen, well, similar one in terms of the signal, so a bearish signal can be seen on the Australian dollar to American dollar. Here we do have slightly more patterns. So look at this. Everything started with the head and shoulder, left shoulder, head and right shoulder, and breakout of the neckline on the last day of February. Then the price declined and the price created descending triangle pattern here. Descending triangle, well, we were expecting breakout to the downside, and it did happen, breakout to the downside overnight. And this helped the price to aim the long-term neckline of this head and shoulder pattern. So left shoulder, head and right shoulder. This can be a good support, but in the same time, breakout of this line will bring us a proper sell signal on the Australian dollar to American dollar. So this formation is very, very dangerous and can bring us a very negative movement here. I think that after this breakout of the blue line, which was important since the Christmas Eve, we got very, very negative situation. Now Canadian dollar to Japanese yen, where I do have a position here more or less on break even right now. Why I opened this trade is because of the fact that we had a downswing correction and now we are breaking the support of this correction and we are coming back below the support. So apparently this is a false breakout, and I do know that false breakouts are very negative and are very, very strong reversal signals. What is more, so we broke first dynamic support, second dynamic support, and now we're breaking the horizontal one. And today we tested those two supports as a resistance, and we created shooting star on H4, but we are also creating shooting stars on H1. So it looks like this resistance is rejected. This has a really low risk ratio, so it's not even like 0.2% of risk, so it's really nothing. But this is a risk worth taking because the potential movement is really big. So I'm looking for 18 pips stop loss here with the potential profit of like 380. So you can see that the risk to reward ratio of this trade is huge. Now Swiss franc to Japanese yen, where I had a position and luckily I closed my position. So I opened this somewhere here, stop loss was here, and I closed my position here, and it was a good call because the price reversed, and currently the price is below the support, below the resistance, and this can be considered as a false breakout. So again, false breakout to the upside should give us a strong signal to the downside. This is why I think it was wise to escape from this position. So I no longer have it. I captured my profits. Thank you very much. Goodbye. Now American dollar to Swiss franc with a proper buy signal. So what is happening here is it started at the beginning of January with the inverse head and shoulder pattern. Upswing, correction, upswing, then a correction. Correction is a flag. Flag breaks the upper line of the pattern, breakout of the resistance, breakout of the resistance, and this breakout of this pink resistance is a decisive one and brings us a buy signal. Short-term ascending triangle pattern, horizontal resistance, dynamic support. With this we should see the breakout to the upside, but the most important two things happened here. So the breakout of the upper line of the flag and the breakout of the pink resistance. And now also, well, we are back above the parity. So one Swiss franc for $1. And it looks positive, it looks optimistic, but the thing is that the potential resistance is not so far away because this is the potential resistance. So a bit risk to reward ratio is not the best here. Okay, let's recap the situation here. So gold is rather a negative history. American dollar to Canadian dollar very positive, but in the same time you should watch out for potential bearish correction. British pound to American dollar, this is rather negative. Euro dollar, this is negative. Euro to British pound, this is rather negative after the breakout of the lower line of this flag. Euro to Japanese yen, negative. Silver, short-term correction, but should result with further drop. Euro to New Zealand dollar, price getting to the green checkpoint should give us a buy signal. Bitcoin positive in a short term. Crude breakout of the black line should give us a sell. Australian dollar to Swiss franc, sell. Australian dollar Japanese yen, sell. Australian dollar to American dollar, sell. Canadian dollar to Japanese yen, most probably sell. Swiss franc, Japanese yen, most probably sell. And American dollar to Swiss franc should give us most probably a buy signal. You see here I said most probably sell because I do have a position here, so I cannot and I don't want to push you over this. Well, for me it looks okay, but don't take that for granted because I have position here, so it will for sure work out. No, I have efficiency of 50%, which is really low, but well, I'm still making money on this market quite a lot with a good reward. But the thing is, efficiency is around 50%, so I earn money because my losses are very small, and when I win big. So this is the main reason. So thanks very much for watching Daily Analytical Report. I hope you enjoyed this and all the best, guys, and see you later.